So Nick, welcome to the show.
Thanks for having me. Appreciate it.
So Nick, you're working with Luxor. You're the CEO, obviously. Do you want to just give us a bit of a background on yourself and how you got into Bitcoin mining?
Yeah, sure. So myself, previous to building Luxor, I was a lead member of technical staff at Salesforce working on Einstein. Effectively, that's their AI offering. So imagine something like Alexa, but for Salesforce. Always been interested in crypto, was mining Bitcoin and with GPUs back when you could do such a thing in my basement, mostly as a hobby, just, really interested in the tech, trying to understand what this thing was. This was around the Mt. Gox time, and there was rife with scams, and people didn't really know what was going to happen then. I think the entire market cap of all crypto in the world was something like $10 billion, if even that. And I was just mostly playing around with different wallets and installing things, and then got wrecked and took a little siesta from all of it, and then really came back hard in 2016 and 2017, working on some projects that I was really interested in, and around that time met my one of the original founders of Luxor, Eddie. We were working on something completely unrelated to mining or Bitcoin even, but we met on GitHub, found each other on Slack, and then just started building what is Luxor today. We started building an altcoin pool because it was a lot less scary to build than a Bitcoin pool. Bitcoin mining was quite large to us as two guys just working nights and weekends. And so we started building this altcoin pool, and then over time just realized we kind of have a knack for this, started finding product market fit with some of our products, and went on to go through the Luxor ecosystem, which is now much more than a mining pool. We do ASIC brokerage. We do we have hosting services, managed mining, all sorts of things that we do now outside of just the pool. So at this point, we're really considering the pool just a feature of the broader ecosystem, and I think you can see that play out in a lot of other areas of mining as well. Foundry and all of those, they don't even take any revenue from their pools. So anyway, that's me. That's how Luxor kind of got started, and that's where we're at. We are known for being a pool, but now we're quite a lot more than that. We're a team of 40 now.
Excellent. And so maybe if you could just spell out some of the different service offerings there, because obviously, as you're known as the pool, you've got the hash rate index, you've got equipment procurement, you've got mining advisory. Could you just spell out some of those just for people?
Yeah, certainly. So mining pool, pretty basic. I think everybody knows what mining pool is. If you don't, it's basically what the thing that coordinates work between all of the mining machines that are out in the world. You hear the Marathon and Riot and all these companies buying up machines. Well, they plug into a mining pool, and we manage those. And so the next step from there is procurement. So we naturally interact with a lot of miners, interact with sellers of mining machines, and interact with buyers of mining machines. And so it's a natural fit for us to facilitate that trade, help people get machines from wherever they need them. Usually we're brokering new machines, but sometimes we're helping with used machines and getting that out there now as one of our new product lines. And we've had great success with it. We launched it in quarter 4 of last year and helped procure almost 12,000 machines. So it's really, really exciting to get that off the ground in the first quarter. And then mining advisory. So, a lot of people are trying to deploy into mining right now, but have never mined. Usually it's energy people. We'll get into energy shortly, but people that don't really know how mining works, but they know how energy works. We come in and we help partner with them to find ways for them to deploy that capital into mining, whether that's through doing some sort of stranded capture, whether that's plugging into a grid area that they have access to, all sorts of different ways that we can come in and assist from that perspective. And that's more than just procuring machines. That's actually getting like containers and transformers and plugs and all of the stuff that you need, and then helping them get it set up. So those are some of the big ones that we're working on. And then hash rate index is what we call our retail focus line, meaning people, we want people to come put their eyes on that and see the data that we have to share. Two of the most popular metrics that we have are the hash price index and the rig price index. So hash price is the value of a terahash at any point in time. We really kind of started pioneering this idea in 2020. And that's what we built hash rate index for, was to start displaying this idea of hash price and get people familiar with it and see that it's volatile and changes over time. And it's somewhat correlated with the price of Bitcoin, but not entirely. And then the other one was the rig price, which is the value of mining machines as they change over time. Our product officer Guzman has spent a ton of time finding data sources for that information, aggregating it, figuring out a very accurate way of calculating what that metric is, and then we bucket it by efficiency. So we've got effectively like an S19 bucket, an S17 bucket, and an S9 bucket, and each of those have different prices throughout the day. And we draw really interesting insight from that. So like, for example, the S9 series, or that efficiency bucket, actually appreciated in price much more than the S19 did during the last big pump, late last year. So it was really interesting to see that. And we think that was because it was, that's one that has come up over the what do I call it, the break-even curve in a lot of places. So anyway, those are some of the product lines that we're working on. We're also spearheading and on the leading edge of hash rate based derivatives. So financialization of hash rate, taking hash rate and using it as collateral, using it as a way to fund your operation. That's something that we're going to be spending a lot more time on in 2022.
That's great. And I think one thing that came out from what you were saying as well is the difficulty of actually getting good numbers on some of this. And of course, some of this comes into the energy conversation that we're having around Bitcoin, and that comes up around, oh, look how much energy Bitcoin mining is using, and what's the carbon emissions of that, and should we be using proof of work? And of course, we should be using proof of work, but
right.
The challenge then becomes, how do you educate people who aren't familiar with this? So what's your view, Nick, of the Bitcoin energy debate, as it were, and sort of the current state of play of education of the broader world out there, obviously outside of our Bitcoin world?
Yeah. So there's two, there's obviously two classes of people that we have. We have folks that are really into Bitcoin and understand this, and then people that just kind of see what the media feeds them around, CNN or whatever is going to say that Bitcoin uses a ton of energy. These folks, they don't really want to dig in and understand a lot of the intricacies there. So we can do a little bit of simple math, very basic rudimentary math, to kind of come up with, we know exactly, we can tell you, I can't tell you exactly what the amount of energy that the Bitcoin network uses, but I can tell you the amount, the absolute minimum amount and the absolute maximum amount that it uses. So the way that we can do that is we can use the lowest efficiency machine that's usable on the network today, which is the S9. And we can basically work backwards from the network hash rate and determine that it's around 18 gigawatts. If every machine on the Bitcoin network right now were an S9, we'd use about 18 gigawatts, which is not that much. And then if every machine were the latest gen, meaning like an S19J Pro or the most efficient miner that exists today, it would use about 6 gigawatts. So somewhere between 6 and 18 gigawatts. I don't know exactly what the number is, but that's a pretty tight range, given that ERCOT itself generates something like 90 gigawatts itself. That's the entire network. That's all of Texas. That's just Texas. We're just a drop in the bucket. But I don't like that argument, because we need to make that drop much larger. We need to become a much larger portion of the bucket to continue to secure this network. And so the next step in the argument is saying, well, okay, so you don't really use that much energy, but you want to. So what does that mean? Well, right now, the cheapest generation sources are generally the cleanest.
Sorry, Nick. Sorry, do you mind? Is that your dog in the background? Do you mind? We're getting a bit of background noise.
Oh,
do you mind?
Oh, I didn't even hear him. I'm sorry. I had my headphones up. Let me.
Yeah, it's all good. Yeah. Yeah.
Sorry about that. I hope you can clip. I'm sure you can clip that. Okay.
Yeah, sure. So, so as you were saying, so you were saying that based on which type of machine you were to average it out as. So you were saying S9s would be about 18 gigawatts, S19J.
Got it. Yeah. So we were, and then I was saying that, well, we use a certain amount of this energy today, and we necessarily need to use more. So the natural next argument would be, okay, well, you don't emit that as much carbon as we think you do today, but you will eventually. But right now, the cheapest sources of energy are generally the cleanest. Using flare gas capture, your cost is effectively zero, and in some cases you get paid to take off that extra gas, and that is removing carbon that would have otherwise been, it's not technically removing carbon, but it's using that energy that would have otherwise just been wasted. Using some of the, using the sources in ERCOT, ERCOT is very, very clean. Natural gas, wind, and solar make up the large proportion of its energy production. And by providing load to that network or that grid, the Bitcoin network is able to make that grid much more robust and able to make it survive some of these events like we're seeing now, which is a good segue into kind of what's happening today in Texas.
Yeah, of course. And so this is coming up today as well because of what happened last year with some outages. So just for listeners who aren't familiar with what happened last year, could you just give the background on that?
Yeah, so last year, Texas had an unprecedented cold snap, meaning it got much colder than it generally gets, and their grid was not able to support it. So people were without power, and in a place like Texas, that means a lot of people, that aren't used to cold weather, are not prepared for it, being subject to a very, very cold winter. It was actually a couple of weeks, and so basically what was happening is that the grid was not able to support that demand for energy. So this demand for energy was coming, which was to heat homes and to keep lights on and do all the things that people do when they're cold. The grid was not able to keep up with it. So fast forward a year, where they're getting ready to go through another very big cold streak here. But we've had a whole year of some of the biggest mining companies in the world building out on the ERCOT grid. And the story that they've been telling for a whole year is that we're going to use up a bunch of extra energy, and in the idea is that you'll be able to produce a bunch more. So say, the idea is let's say Houston on any given day needs 50 megawatts. Well, during this cold snap, they need 150. Well, you can't build out 150 megawatts for a single city because you don't have anywhere for that extra 100 to go when the grid is not needing it. Right, so it's effectively wasted, and so what Bitcoin miners will come in and do is they will provide that demand, that base load, which is Bitcoin mining is this type of base load has never existed in the world until today. This economically incentivized base load that has effectively zero turnoff cost other than the opportunity cost, and it's also instantaneously rampable, so you can turn it up and down almost effectively instantly. A few seconds here and there, but this idea that when Houston or some city in Texas gets very cold and needs an extra 100 megawatts, well, now Riot and Lancium and all of these great mining companies that have been building out in Texas will just turn off their power, their Bitcoin mine, and let that energy flow through to the city and bolster the grid. There could be times in the summer when it's hot and people need all the air conditioners turned on that this works just as well. So the idea of building these it's called demand response. These demand response centers really bolsters the grid and gives Bitcoin mining a phenomenal story to tell to the market.
And so it comes down to how much of that is a factor, right? Because I could understand where maybe somebody might be listening, they might be a bit more skeptical and saying, well, how much is that? How important is that really?
The demand response part?
Yeah.
Well, we're going to find out. So you're right. So a lot of critics would say that it's actually it's somewhat of a double-edged sword for the critic here, because they're saying, well, Bitcoin uses a lot of energy. But in this case, what they would say is that Bitcoin doesn't use enough energy to even make a difference on the grid. And we're going to find out. Maybe this year we've only had a year in Bitcoin mining. Bitcoin mining may be one of the slower moving areas of the sector because it takes a long time to pour concrete, build buildings, plug in machines, get them from China, all that stuff. So we only had a year to build out. Hard to say exactly how much capacity they built there. Maybe a gigawatt over the year. But we're going to find out soon whether this is going to work out or not. There have already been press releases from Rhodium and Riot about how they're spinning down their capacity and letting that energy flow through to the grid and to people's homes. We'll see if it's enough this year.
Yeah, and on that, it also comes down to what is the cost of energy at this time, at this incredible peak demand time. And I think that's part of this whole argument, right? Because the argument is that during these times of incredible demand, the price of energy or electricity is going to shoot up so much so that these Bitcoin miners have an incentive then to, it's rational for them to actually turn off and say, look, I'm just going to take that money, that income for turning off rather than leaving my mining going.
Right, exactly. That's so that's actually a really good point. So they get paid to it's called curtail. They get paid to curtail in some cases. You know, they're contracted to take a certain amount of energy, but they also that means that in sometimes there are times when it is beneficial for them to shut off because they'll get paid to curtail. The problem that we've had in the last year is that Bitcoin mining has had such thick margins that they're willing to pay really, really high costs for that energy. You know, as we reach more of an equilibrium in the price of Bitcoin and the marginal cost to produce Bitcoin, I believe that will become a much narrower band. But right now, you know, I think Bitcoin miners could be profitable up to 40 or 50 cents. I don't know that off the top of my head, but some number that is much, much higher than the average. You know, I think here in Seattle, I pay 12 cents a kilowatt hour. I think I could still mine an S19 very profitably. Or I know that I could mine an S19 very profitably just here in my house with current market conditions. But I know that won't be the case forever because there are places that are purpose-built and doing this type of demand response consumption that will eventually beat out my miner. And in that case, then we start getting to a point where the value of the hash rate and the value of the energy start to become a little bit more in equilibrium. And then it becomes a lot closer to the shutoff point. So, say the price of energy goes from, or for, say for Riot, the price of energy goes from whatever they pay, probably, 4 or 5 cents. Then it goes up to 20 cents. Then they're going to shut off. But I'm very happy to pay 20 cents to keep my house home warm. My incentives are much more external than purely profit driven.
Yeah, that's a good point there. And some of that also comes into this question of cost to mine. Now, of course, there's so many variables that go into that, and there are profitability calculators you can look at. Okay, what machinery am I using? How efficient is it? What's my cost of electricity? And then what's my break-off point, or so on. And I've seen others comment that just because of various conditions today, given the energy prices, given the availability of the mining equipment, the current network hash rate, that a lot of the even publicly listed miners have actually a cost to produce Bitcoin that's quite a lot lower than the current market price of Bitcoin, which is, call it $37,000 as we speak today. Some of these miners, apparently, their cost to produce is something like $10,000 or $15,000 per coin, in that range, right?
Yeah, 100%. So you can go look at the public filings and see exactly how much these guys are mining for. But on average, I would say that some of the best miners in the country, at least in the U.S., are probably somewhere in that like 7 to 8K range that they're able to mine. But they do have to amortize the cost of their the cost of capital over the lifetime. So it's not that's how much it costs them to actually mine the Bitcoin. But then that revenue margin there between the 8 or 9K or whatever it happens to be, let's just say they make 30K a coin in revenue. They also end up having to pay. They have to pay for their machines and for all their infrastructure. So there is a lot of amortization of capex that a lot of people miss. But at its very base, there's a lot of thick revenue to be made there.
And I'm curious, and I imagine listeners are also curious, what might be the reason for that? Could it be, so again, there's been this big chip shortage, and it's been difficult to create as many mining rigs as the market demand is, or as much to compensate or to basically serve all that market demand. Is that part of the reason why there's that disconnect?
Yeah, so... Well, there's a lot of reasons. So one, it's definitely been harder to get machines than before. Nobody would argue that. The number of machines getting plugged in now is vastly lower than the demand, and that's because they just can't produce enough. But, and I'm going to get blown out in the comments for this, hash rate follows price. Hash rate follows price. I don't care. We can argue about it in the comments all you want, but hash rate follows price, and that's what we see here. So hash rate is, price generally moves a lot faster in one direction or another than hash rate. And when we see these big pumps in price, especially, we've gone, let's just say we went up, effectively 4 or 5x from the 2017/18 high. hash rate has not followed that trend yet, and we're getting there. We're definitely catching back up. The China ban threw a little bit of a wrench in things, but hash rate is still catching up. So it's definitely lagging price, and we're going to get there where hash rate and the marginal price to produce Bitcoin is going to come up, and either the price of Bitcoin goes down or the marginal price just continues to rise up to that level where it becomes only profitable to mine for the most efficient miners, which is what we saw, summer of 2020. That was the record low for mining profitability. And we saw actually the first time, I think that may have been the first time, at least in my history, that we saw the marginal price of mining a Bitcoin bump off of what I call the difficulty cap. So the difficulty actually dropped a couple of times because miners were dropping off the network. It was no longer profitable to mine. And that was one of the first times we ever saw that.
Yeah, so it's a range of reasons, and I guess as you were saying, so because that's one of the arguments, right? So the argument is, does price track hash rate or does hash rate track price? And I'm actually with you. I think it's more like that hash rate is following price, but it's like a lagging sort of 100% indicator. And there are times where maybe it wants to catch up, but it can't. But then times where let's say
we're certainly right there where if you had more machines in capacity, well, right now I think we're mostly capacity constrained, meaning we don't have enough gigawatts in the world available to plug in. We segue into the mining ban in China, because that was, there was a lot of energy in China that came offline, and those plugs are no longer available to plug in. So we have to either rebuild them here or elsewhere to get that amount of hash rate back online, and then continue on the path towards that equilibrium.
And so, put in other words, is that at the time of the China ban, so call that halfway through last year, I think it was around July, August or so of 2021, and we were talking about literally hundreds of thousands of Bitcoin mining machines that were being unplugged in China, sent overseas, and plugged back in. But as you were saying, the constraint in that case was also around what we might call rack space, that there's not enough buildings and racks and everything lined up where you can actually physically go and plug in all of those machines. So maybe that was where one of the scarcities was, at least at that point in time. Is that what you're getting at?
Yeah, so we did the math. We found that at a minimum, there were 600,000 machines came offline during that time, because you could see the hash rate drop, and you could estimate, and then you could do a little bit more estimation and figure out like how much actual power that is to build out. And I'm very surprised at the human ingenuity that was put into getting those machines back online. I didn't think we would have broken 180 exahash in 21, and we eclipsed that pretty easily. So. Exactly like you said, all those machines came offline, and the problem wasn't that people didn't want those machines. It's just that they had nowhere to plug them in, and it takes a long time to build out these facilities.
And what of the question of guerrilla mining? So I see there were a couple of news articles about this, of people who are still in China and potentially they are using some means of masking or hiding their use of the power, and potentially using, say, a VPN to other countries, and then that 100%. Hash rate looks like it's actually coming from another country, but actually it's still back in China.
100%, yeah. So we learned about this, and that was, I think that's one of the biggest contributing factors to getting back to the hash rate that we are today, is that people were figuring out ways. Our Chinese counterparts in Bitcoin mining in China, they're clever guys. They're clever folks. They're going to figure out where, some way to get those miners plugged back in. They're either going to work with their local municipality to shield them from the federal government, which is what, I heard some stories of folks that had their Bitcoin miners in effectively semi-trucks, and they would hear that, there's going to be a federal inspection of the grid now, so you got to get out of here. And so they would move and then come back when it was safe. And, I've heard of that. And then, like you said, guerrilla mining, where they're so far off the beaten path that they're not worried about, inspections or anything like that coming through, and, either seizing their machines or finding them or whatever it is that they're doing. So yeah, 100% there is guerrilla mining going on in China, and we, applaud them, keep those rigs on. I think that's, we love to see it. And I really hope that, they can continue to do so. Also heard a little bit of news through the grapevine that they may be, I don't want to say unbanning mining, but they may be, or maybe they'd be unbanning it, but adding an additional tax, which, I'm not a huge fan of adding a tax, but if we can get down the path of getting China back online, I do think it's good for the network to have an equal distribution of hash rate around the world. Why
do you believe that? Why is that a good thing?
Yeah, so whether we like it or not, Texas may be one of the freest places in the world, and they're going to stand up to the federal government. If the federal government in the United States told Texas to turn off, they would just give them the finger and continue to do so. But that doesn't mean that it's not a possibility, right? So what that means is it doesn't really matter where the machines are located. I don't think that they are all going to forever be insulated from some sort of external power having influence over them. So I'd like to see 10% in Texas, 10% in the rest of the United States, 5% in Canada, 3% in Central America, 10% in South America, 15% in China, 5% in Kazakhstan, etc., all around the world. So that way it doesn't really matter. Kazakhstan shuts down, 5% comes offline, just gets moved somewhere else, and no big deal. And we've seen that for sure happening now. But I am a little concerned with how much we're getting here in the U.S. We always marketed ourselves as North America's first mining pool and the greatest North American mining pool. But and I always said that North American mining is going to dominate the conversation over the next decade. But I didn't want it to be like this. I wanted it to be because we could outcompete our Chinese counterparts and our global counterparts, but not because their governments shut them down.
And on that topic of inter-country competition as well, because there were different views that I saw. Some people were saying, yeah, look, it's how great it is that all this hash rate is coming to the USA. And so perhaps in some sense the patriotic element of it was there, but perhaps from the overall point of view of Bitcoin as the decentralized distributed project, that's where this argument of actually it's better if it's distributed out around the world.
Yeah, I would say, I was as happy as anybody to hear, my company directly profited, and a lot of American companies directly profited from this happening. But my personal view on Bitcoin as a project is that we want this to be as decentralized as possible. The fewer machines in a single place, the more machines we can get, the better, and then don't put them all in the same place.
Right. Yeah. Yeah. And I think I agree with you there. And with the aspect around regulation and the public perception of that, what do you believe are the best ways forward? Do you see it as education? Do you see it as Bitcoiners have to get involved in the political game, even if they don't want to?
Yeah, I think we're going to see a Bitcoin party, a Bitcoin centric party form in the U.S., and that'll start to craft. Whether we like it or not, American politics crafts a lot of the global conversation, and so I think we 100% need to have a Bitcoin party. Whether that's one of the parties that exists today, I prefer it not be. Prefer it be a new party or somebody that's able to come in and really disrupt what's happening here. I do know that if we do get a Bitcoin denominated party over the long term, it'll be the best funded party that exists. And so maybe that allows them to win more. Kind of like Peter McCormick is his football team. I think they'll be one of the best funded football teams over the long term because they're denominated in Bitcoin. I think that this is the path forward for us. This is how we craft the conversation. We get a political party that is Bitcoin denominated, and then start having those conversations. Bring them to the White House. Bring them to Congress. Even your local governments. It all starts local and then filters up. And I think we need to be having those conversations and need to be talking to people about this. So it's education and political activism combined.
Right, because the way we all see it, we're all bullish on Bitcoin, and as we've agreed, price is going to go up, and if hash rate follows price, then necessarily there's going to be a lot more Bitcoin mining machines that get plugged in, and this conversation is only going to become more and more important and larger in the broader political world, whether we like it or not. And so that also brings that question then of whether Bitcoiners should be trying to make the argument, and I'm curious your view on this, should Bitcoiners be trying to make the argument of, oh, look, it's, not that much carbon emissions, or it's lots of renewables, right? Or do you see it more like it should just be made on the principled argument of, even if it was 100% fossil fueled mining, it would still be worth it?
I think we could try to make that argument. I don't know if it would land. And being pragmatist, I would prefer to just take the easiest path to acceptance. And if that happens to include an ESG narrative, I'm happy to go down that road. And I do agree with you that I think that 100%, even if we're all coal powered, 100% dirty, I think that the value that Bitcoin brings to humanity and the globe is worth the cost. Because I don't think that there's been an innovation in the last decade that will change the planet more than Bitcoin. What it brings to people from an inequality perspective, from an equity perspective, it allows you to actually own something without anybody's intervention. That has no cost. So I do agree with you that I think that there's really no cost, or there's no price that you can put on this thing. But I do think that it's a lot easier to tell the story that Bitcoin doesn't use that much energy and is green in all these different ways. So that's the way that I would like to tell the story, just because I think it'll be an easier one. But I think long term we can tell the story that doesn't matter the price.
I see, yeah. And so the hope also is that those of us who see Bitcoin as this money of enemies or money for anyone to use, we also don't want to see it get regulated. And I suppose that's one of the arguments, is that if we try to counter to the ESG narrative, that potentially there might be more censorship coming down the line, whether that be whitelisting, blacklisting, other kinds of, you may not participate unless you are XYZ or X% level of renewable, right?
Yeah, that's definitely, it is a slippery slope, but I think that every slope that we live on is a slippery one. And so we have to figure out where it is we're going to stake our foot, and stop the slipping. I think kowtowing to an ESG narrative in the interim is okay. Obviously not ideal, but we live in a world of compromise where we live in a world where not everybody's going to agree on everything. And so if you can get a majority to agree with you on one thing, try to use that majority to your advantage. And I do think that over the long term, people will come around to this idea, especially as they start to own Bitcoin and Bitcoin just becomes more ubiquitous. I think adding things like Strike Pay is going to definitely change the way people think about Bitcoin, because it will allow them to interact with a global monetary system almost frictionless. So I think in that regard, I think it's just about getting a critical mass of people interested and involved, and from there they'll all view the value of Bitcoin is, it doesn't I don't want to say price, because that's not the price of Bitcoin. The price you have to pay for Bitcoin to exist, the value that you get from it is vastly more. It's orders of magnitude greater.
So thinking now about Bitcoin mining hardware, I'm sure you would have seen the recent news around Intel getting into the Bitcoin mining rig production and creation game. So I'm wondering if you have any thoughts on that, or any ideas on where that's going. Will they be competitive with the current competitive Bitcoin mining manufacturers?
Yeah, so we have heard a little bit about those machines. So I think that the consensus is right now that they'll probably fall somewhere between. So the S19 XP is the latest revision, is the latest version of the Bitmain miner. It's their pinnacle machine, which is coming out. It's supposed to come out in Q3. Hearing that it's probably going to slip to Q4 of this year. And then their current model is the S19J Pro, which is like their most efficient one. We think that it seems like the Intel is going to fall somewhere in between those two. So it's going to be a really competitive option. And really now all they have to be able to do is compete on price of the machine. If they can produce a machine that is lower cost per terawatt, per terahash than the S19 XP or the S19J Pro, then they certainly will be competitive. People will buy the machine. People still buy S9s today, even though it's at a much lower dollar per terahash number, but S9s are from 2016, 17. So I definitely think the Intel machine will be competitive. A couple of their barriers right now will be one, producing at scale, right? So I think Intel, if there's anybody out there that can produce at scale, it's probably Intel. So they may have that one covered. We've seen some other pop-ups come around that have not been able to produce any meaningful number of machines. They produce a machine that's marginally competitive, maybe competitive with the latest gen, or maybe the previous gen, but they haven't been able to produce enough of those machines. So Intel, I think, will be able to. And then the next step that they have to do is be able to get chip space, which I think Intel should be able to do, no problem, right? They should be able to get enough capacity in the foundries, to produce enough chips. So I think that they'll definitely bring a machine to. I think their machine is going to come to market. It's going to be competitive, and I think that they've got. If the first run is even close to competitive, that means the second one is going to be really good. So I think this is great for the space. It's a huge validator for everybody that's been around. Intel, biggest chip maker in the world, is going to come to market and try to compete here. I wouldn't want to be in Bitmain and WhatsMiner shoes for sure.
And how will this change the game of hardware procurement? Because as I understand today, sometimes you have to go through a partner, and I know obviously with Luxor you have hardware equipment procurement and advisory services. So what does the current state of play look like for somebody who's trying to purchase mining equipment?
From Intel?
Well, I mean, just in generally, and then maybe we'll talk a little bit about what it looks like if, let's say, the market gets bigger and bigger.
Okay, sure. Yeah, so buying machines right now is definitely it's an interesting space. So in general, there's a couple ways you can buy machines. You can buy futures orders, meaning you buy, say, I want to buy a delivery of machines in Q3 of 2022. I need to buy a minimum amount, and they get delivered over each of the months during that quarter. Let's use a round number. Let's say 1,500. I buy 1,500 machines. Usually they'll come in batches of 500 over the course of that month. That can change. There's all of this is very flexible. So if anybody in the comments is that's not what I did, well, that's because it's very, very different for every order, and that's what the Luxor service is here to provide is clarity on how many different levers there are in this equation. So you buy these futures orders, you buy the machines. Well, you have to put up 60% of the order price. So right now, that's you're looking at, let's just say, around $15 million if you wanted to buy 1,500 machines. It's probably gone down a little bit since the price of Bitcoin has gone down, but still, you have to put up 60% of that, and you just wire that to a Chinese entity. And if you're not working with a broker, there have been cases where that money just goes away. Luxor comes in, provides you a level of security, and makes sure that those machines, that money is actually going somewhere and is actually going to result in machines. So then, once you put down your deposit, then within 30 days of your order starting to be completed, so it would be within 1 month of the start of your quarter, you'll put down another 20% and then 20% upon ship to get them shipped. So that's how futures order generally works. That's not always the case. It's not always the case, but that's pretty much your prototypical order. Now, spot orders, meaning I want to buy machines and I want them shipped now, generally are 100% upfront. So if I wanted to buy 1,500 spot machines, I wire my $15 million to somebody and they start shipping them within 10 days. And so that's another, again, this is all very unorthodox. When you're procuring infrastructure equipment, I'm certain that Dell and Intel, when they go buy their new servers for their data centers, have a little bit different process than that. But that's happened. That's the world we live in. The mining manufacturers right now have all the power in the world because they have effectively money printing machines that people want to buy. We kind of have to play by their rules. So Luxor comes in and helps you a bit in that regard. And that's all for new machines. Buying used machines just opens a whole new can of worms. It can be all over the place. So especially if you're buying previous gens like S9 or S17, you end up losing a lot of machines because they get damaged in shipping or they're not good from the start. So Luxor provides a barrier there or a little layer of assurance that you're actually going to get close to the number of machines that you attempted to order. And so that's kind of how it works.
That's interesting because it seems like if you are not already well connected in that world, and potentially also if you are a smaller doing on smaller orders, that's where maybe the value of having somebody to broker that for you helps more so. Whereas if you are a bigger player or you've already built those relationships, then you might be in a better position to just go it solo.
Yeah, certainly. Like Marathon probably doesn't need a broker. They go out, they buy they buy 100,000 machines. They go direct to Bitmain, probably get CEO on the phone and talk to them about it. It doesn't even include like there's secondary buyers in China that go out and buy machines straight because they have the relationship with the manufacturer. They buy say 100,000 orders and then they resell them for a profit, and that's usually where most of the machines are coming from, is from these resellers. And so it's a very disparate world, very difficult to navigate, and so really what the brokers are doing, Luxor included, is just trying to provide you that layer of assurance. The machines you actually get and pay for are going to show up.
Right. And so I'm curious then if you have any thoughts on how things change as the Bitcoin market and the mining market grows. Does it then become a bit more like standard technology vendor relationships that exist today?
100%. I think we're headed in that direction. We're maturing as a market for sure. And I think that we're going to continue to mature. It is a little bit more, it's a little bit more nuanced here though, because like I said, these companies are producing money printers, right? They're basically building you a machine that will print you money. Where like with Intel and Dell, those are machines that you have to put your own IP on, and then that I install, I buy my machine and I install Angry Birds or something on it, and then it becomes valuable. So I take and provide my own value to it. In this case, they're basically just giving you a machine that prints money. So the dynamics may never become exactly the same as what we're used to with infrastructure procurement today, just because of that that caveat. But I think we're going to get a lot closer. I think margins will compress on brokerage and procurement, because right now it's I would say that it's generally swayed in favor of the broker, and I think we're here to we'll see that continue over the next, probably I would say it's going to be 3 or 4 years for that to really play out. But I think we're headed in a direction where this becomes a lot more egalitarian and a lot more transparent as well.
Interesting. And I'm also curious as well if you have any thoughts around hardware life cycles, because this is an interesting one from years ago, because I guess I'm going to say my understanding, and you tell me if I've got that right. So in the earlier years of Bitcoin, because there was so much tech advancement happening so rapidly, the life cycles were much shorter. And then what's happening now, it seems, is that the life cycles are stretching out more, that you are potentially having more and more years that you can use that machine. And so there are these circumstances where if you have very cheap power running on an S9 from 2016 or 17, as you were saying, it's still quite profitable for people. But if you're operating on expensive power rates, then you really need the more efficient, newest, latest and greatest. So I'm curious, where do you see that going with hardware life cycles? Is it going to sort of lengthen further? Obviously, there's all these variables out there, but just if you had to speculate.
Yeah, certainly. So you hit the nail on the head. So the very early years of Bitcoin mining, we went from CPU to GPU to ASIC mining really, really fast. Like by the time I got my GPU rig up and running, there were not Bitfury, Butterfly Labs was producing ASIC mining machines. And by the time I went and bought one, I bought a Jalapeno, the little cube. And by the time that thing showed up, it was obsolete. And so we were just plowing through the series. And so what was actually happening underneath the hood is like they were probably producing chips that were, it's called a process. So they were 50 nanometer chip, probably 55 nanometer chips, which at the time, I mean, almost anybody could print those. It really didn't take a genius to do. And so, but as the chip process gets smaller, it requires more and more expertise on how to produce those chips. And that's where we're kind of bumping up against that law. So now we're producing chips that are like 5 nanometer. And you can't really, there's like a theoretical limit. They think that you can only go down to 3, maybe 2 nanometer chips. So we're kind of bumping up against that hard limit on the chip process. So as we were going from 55 to 5, there was massive innovation. That was happening very, very quickly. And so that's why we burned through those first generation of machines in no time at all. The S9 came out, landed, and there's, like you said, those are still being used in production today. From 2016 to 2017, those machines were produced. And then the S17, there's public companies that are basing their entire business model around the S17 series. The S17 series did have its troubles. They used a different manufacturing process, which caused them to be very delicate and breakable. But there are people that have built business models around, fixing those machines and getting them at a discount and then fixing them and using them. And then the S19, I could see the S19 lasting for 5 to 7 years easily because of the generation. Not an individual S17 or S19 could break at any time, but that generation, that series as a whole, will probably last 5 to 7 years just because of the marginal increase in efficiency is reducing to a point where all I need to do is take my S19s and find a little bit cheaper power. I need to only find 5 to 10% cheaper power to keep them on, where before I would need to go find power that is 80% cheaper to continue running my old machines. So 100% you hit the nail on the head with machine series and how they're progressing. It's slowing down, certainly.
And just that comment around the series, because there are many, I guess, S9s and S17s and S19s. Could you just explain that for listeners? Why is there a difference between these?
Okay. Yeah, that's a good point. So there's in what we call the 19 series, there's like the S19, the S19J, S19J Pro, S19 Pro, there's a T19, there's all these different models within that series. They all have a little bit different price, a little bit different efficiency, and really that comes down to the chips that they put on each board. Like each chip, the chip in, I'm using a MacBook here, the chip in this MacBook and the chip in an identical MacBook are going to have different performance specs, very, very, but it's going to be very small, and they keep them all within a range, but it doesn't mean they're going to be exactly the same. And so that's why they have these different models within a series. And so like the 17 series, there's a T17 and S17 and S17T, like there's all these different series within the S17, and same with the S9. So that's why I call them series. Generally there's like a bucket, they're the efficiency of the 19 series is somewhere between, 36 and 42 joules per terahash. And let me see, I don't remember what the S17 is off the top of my head, but yeah, they fall within like an efficiency range, and that's why we call them series.
Excellent. And so when it comes to the what was I going to? I lost it. But when it comes to actually procuring them, I guess that's why they're sort of bucketed in that way. Oh, that's the question as well.
Right.
How about the difference in reliability? So how are you seeing that? Like, are there some manufacturers for which their equipment is more reliable and it can last longer, or it's maybe easier to repair, like let's say the Toyota Camry or the Honda Accord of the Bitcoin mining ones?
The Honda Accord, the S9 is the Honda Accord. Not the fastest, not the prettiest. Man, that thing's going to run forever. Same with the Toyota Camry. So the S17 series I alluded to earlier had an issue with its manufacturing. So they used a different type of heat sink. Actually, I believe it was the glue on the heat sink was not up to par. And so what would happen is during shipment, the heat sink would rattle loose, and the heat sink is like a little thing that attaches to the chip and gets the heat out, and it would rattle loose, and then the chip would just melt, right? So, the same thing would happen to your MacBook or any other machine that has a chip in it, has a heatsink on it. If that heatsink rattles loose, the chip's going to melt. And so that was happening to the S17s, and they have a failure rate very, very high. It's not because the machines themselves, the chips, or anything about the chip boards themselves is bad. It's that the heatsink was not produced correctly. So, just like you said, there's definitely variance within series. The S9 it was a really good series. There was not a lot of manufacturing defects with the S9s, and we're seeing the S19s are also really, really good. And now across manufacturers, so the S series, those are all Bitmain machines. There's also a brand called WhatsMiner, and those WhatsMiner machines we've seen have generally been very high quality. It doesn't seem like they've really had a bad series like the 17 series. They've had. They have the M30 series. Theirs is equivalent to the S19, and it seems like the failure rates on those are really, really good. So it's not really possible to put an exact failure rate on these things. It's all anecdotal, right? So it'd be like me asking my friends, or talking to people about what kind of machines they use and how many failures they have. And there's so much nuance there, because the machines running in an immersed building versus machines running in in an air-cooled facility out in the middle of the desert are going to have vastly different life cycles or lifetimes. And it's really hard to pinpoint exactly what the lifetime of a machine is.
And on this question of lifetime as well, I think that's the other argument that I've heard as well around this demand response. So bringing back to the demand response question, as I understand, it's just like with other, if you're running a car on the highway and it's just on all the time, that's efficient. But if you're in the city and you're stop starting all the time, it's not as efficient. It's less, it's going to take more fuel. And is there a similar impact there for that demand response miner, for example, even in Texas, as an example? Are they going to see reduced lifetimes on their mining equipment? And is that going to be an issue?
Yeah, so we don't know. First of all, I mean, anybody that says they know for a fact doesn't, because we haven't done this at scale for a very long time yet. So we're not 100% certain. If we look at just chip technology as a whole, there shouldn't really be any degradation of lifetime or performance. Basically, if a chip is using energy, as long as it stays cool, it should last just as long as if it's not. So in the case of lifetime, it's very difficult to say for a fact, but most likely not. It probably will not affect the lifetime of the machines. As for energy efficiency, no, I don't believe there's any, because it's more like a battery. It's like a battery it's actually more like a negative battery. If you go around the Bitcoin mining facility, say you've got these a big hose and it's going through the facility, and all of the the energy that's flowing through it is going into Houston. Well, if you route the hose around to the facility, the energy just still goes into Houston. The facility powers down for a bit, and then when it's time to turn back on, the hose just flips back over. I don't think there's any major performance impacts to the efficiency of the machine, the efficiency of the mining facility or anything like that. Also, the curtailment periods are generally, I don't want to say brief, but they're infrequent. They don't. It's not happening like multiple times a day. It usually is something that happens for a period of time and then stops, and then I don't think you don't get it for very, very frequently. So I guess that would be the answer to that question. But yeah, it's a great question, and I know that we're going to have to get more data on this, and so I'd urge anybody that is doing demand response to try to keep as much data as you can, and try to produce a valid, a good report that we can use down the line.
Yeah. And I guess one other topic I was keen to touch on, as you mentioned earlier, around hash rate derivatives and financial products being built around Bitcoin mining. And you mentioned this is a priority for Luxor as well. So maybe if you could just touch on some of that, like what kind of products do you see coming in the industry for this? Okay.
Yeah, so I think the very first one, let me pause. Sorry, my cat can actually open the door.
No worries.
All right, pause again. So I think the very first one is going to be a physically delivered forward swap. What that means is, I have a bunch of machines that I want to sell forward some hash rate for. So I go and I sell forward 100, let's say 100 petahash. That'll be, on the order of be a couple $1 million. I bring that forward and I get to reinvest it immediately, and start buying more machines, buying more infrastructure, etc. And then the buyer is incentivized to purchase that hash rate because they think they can get it at a discount. They can get Bitcoin at a discount by doing so. Then we think that as enough volume of these physically delivered forward swaps gets put on and occurs, then eventually you will need to hedge that risk. So if I've sold some of my hash rate forward and the value of that hash rate goes up, I've effectively shorted my hash rate. I can go and purchase what we call a cash settled future to hedge that. So if it starts moving away from me, I can go and purchase a cash settled future that when it settles it will help me hedge out the value of my underlying production. We think those are two of the most important primitives for this space. I think there's going to be a lot of different primitives that come down the line. There's going to be like a forward future, meaning I sell forward hash rate that doesn't exist yet. So I say I'll sell you 100 petahash of hash rate that comes online May 1st, and I will sell it to you for 3 months. You'll probably get some discount in your incentivization for taking that risk is that you'll get a discount on the value of the underlying. And then again, you can start building in really long futures for this and that sort of thing. So I think these are some of the very basic primitives that we'll need. And you can see this happen in pretty much every other commodities market. So oil, energy, corn, hell, pig bellies, all have futures markets, and they also have physically delivered, cash settled, all different types of products. And we're really starting to hone in on what the market demands for these products. It does require quite a large tech stack to do. So like actually settling these forward contracts requires a pretty robust tech stack, as well as the ability to do advanced like financial reporting and the ability to produce some cogent model at the end that demonstrates, yes, this amount of hash rate was actually delivered, and here's the result of that hash rate in terms of Bitcoin or dollars.
Really interesting to think about. And maybe just as an example, just to make it real. So let's say I'm a Bitcoin miner, and
yep.
I want to do my forward planning, and I need some certainty in my business planning. Yes. And then I might go to you and say, hey, Nick, I want to sell you my future hash rate. And let's say you're a trader, you're taking the other side of that trade, and you're saying, hey, Stephan, okay, give me a discounted rate on that future hash rate, and I'll pay you some money upfront for that privilege. And then I take that money, and I'm going away and using that to build my mining farm. And that then is kind of the basis for this. And so that's kind of that first product you said?
Exactly, yeah. Yep, and that's what we call a physically delivered forward swap. And the idea there, like you said, is the buyer is incentivized, the speculator is incentivized to do so because they think they can get it at a discount. And then the seller gets to bring forward a bunch of revenue and reinvest it in infrastructure or buying new machines or unlocking a new project. I think this is going to be one of the most exciting ways that miners can fund their projects in the future. Once we've got a more robust system, somebody says, hey, I've got the ability to produce X amount of hash rate. I need this level of capital. Right now, they have to go get a very expensive loan or figure out how to raise capital for that. They can just sell it to the open market.
Really fascinating to see, and I'm curious to see where that goes and what kind of markets evolve for this. Like, will we have some kind of centralized exchange provider for that, or will it be kind of a more decentralized model where there's, let's say, different Bitcoin mining companies who are offering this as a product or some kind of service, like to match between the miner and the trader?
So we view the first one, we've seen this a bit already for, there's some folks offering like a bespoke OTC product around this, like the ability to, basically it's a one-off type of contract that's originated between two parties using a third party intermediary. Someone like Beruda is doing this, and we've seen that I think right now the hold up that's causing them from breaking through to that next level is the ability to service the contracts, which requires a pretty large tech stack, which Luxor fortunately has the ability and the expertise to build. So we're on the track to building these things and really looking forward to to bringing these to market over the next probably won't be 12 months because it's also a very regulated type of endeavor. But over the next, I would say, 18 months, start to see something like this happen.
Well, I'm excited to see where that goes. I think we've pretty much hit the time for this episode. So, Nick, where can people find you online and follow what you're doing?
Yeah, so you can find Luxor at luxor.tech. From there, pretty much all of our product pages are available. You want to yell at me for saying hash rate follows price or any of the other dumb things that I've said today, you can find me at @hash_bender on Twitter. Or if you want to go take a follow along the Luxor, we have at Luxor Tech Team and at Hash Rate Index. So come give us a follow. Let's chat about this. This is one of my favorite things to talk about. So if you have something interesting, I'm certain that we can find a topic to discuss. So really appreciate it. Thank you so much for having me on.
Thank you, Nick.